Hello everyone, and welcome to this Specialist Trading educational presentation for Saturday on October the 5th. Now today I want to speak to you about the proper way to calculate your stock position sizing. I know this may seem very menial to some people, as if it's not that important, but too many traders base their position sizing just off a whim, how they feel coming into that day, if they've been lucky or if they feel unlucky, how well they've been doing. But this is really an extremely important piece of the puzzle of your money management. And I'm going to take all the hard work out of it for you, take all the guesswork out, and show you a simple formula today that can really improve your odds for consistency. So here's what you're going to learn today. Edge number one, I'm going to teach you how to properly calculate your risk per trade. Then we're going to go into the RPS method. This was a method I was taught some 4 decades ago by my mentors on the floor of the Pacific Stock Exchange. And this is the method that takes the guesswork out of deciding and calculating your position sizing for stocks. Okay? And you're going to see how simple it is to apply actually on our platform. This is the PTS Primo Charting Platform. I designed this and developed it with Pro Trader Strategies, where we really take the hard work out of everything for you and make it extremely simple. This is the educational portal that automatically generates your position sizing for you. So welcome to today's educational presentation. My name is Steven Primo. I'm the president and founder of Specialist Trading. 10 years ago, I teamed up with Pro Trader Strategies with one goal in mind, and that was simply to educate traders around the world. And in that 10 years, we've got just literally thousands of students all over the world in virtually, I believe, over 110 countries around the world and in every state in the United States. And we're simply trying to educate you because we believe that's what's missing from most traders' plans. You know, most traders make their decisions based off what someone or something else is telling them to do, what to do, but they don't rely on their own education or their own expertise because they feel they don't have enough experience. They feel that they really don't know enough. And that's really a terrible way to get involved in any endeavor. I mean, imagine if you opened up a small business and said, well, I'm going to rely on that guy down the street to tell me what to do. If it's a restaurant, to tell me how much food to buy or what to serve, because I really don't know what I'm doing. If you get involved in an endeavor like that, you shouldn't really be starting it because you're basically giving your power away. Any business, any hobby, any endeavor, you should be in charge of making your own decisions. That's the reason why you're doing it. And it's no different from trading. Unfortunately, most traders do the exact opposite. You go to a chat room or to a nightly signal service, or you watch all the so-called pundits on TV and find out what they like or what they don't like, and then you blindly follow. That's why it's been estimated that upwards of 85% of all traders fail, because you're basically blindly following someone or something that shows no higher levels of consistency than anything else. So what we provide is sound fundamental education that stood the test of time, that has shown high levels of consistency, things to help you along your trading so that you can be making your own trading decisions. In my 42 going on 43 years of trading, this is the only thing that will make you a consistent trader. Not blindly listening to someone or some chat room or some system that you have no idea what it's based off of, but by making your own trading decisions. And with the education we provide, you'll be able to do that. So you'll see the education we provide in today's class by sharing with you the RPS method. But before we begin, as always, we are first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using the RPS method to calculate your stock position sizing. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated. And please remember that all examples are strictly for educational purposes only. Now, as you're taking a brief moment to view our required disclaimer, I'd also like to take this time to invite each and every one of you, if you haven't done so already, to follow us on Twitter. Here's our handle right here, abbreviation for Specialist Trading. You might want to copy that down because every day I post different information, anywhere from signals, our strategies, our educational strategies have generated, to little bits of financial wisdom I've accumulated. So lots of great free education about trading, so feel free to follow us on Twitter. Now, as I stated in the opening statements, we are different from other webinars you may have attended in that our only goal is simply to educate you. That's the service we provide. Sure, we have systems, or I should say we have strategies, we have methods, we have techniques, but these are all here to educate you, and we show you exactly what is behind all of these different methods and techniques, okay? So as you can see here, my goal is not to force feed you signals. My goal is not to tell you what you should be trading tomorrow or what you should be buying or selling, or my goal is not to tell you this is the perfect time frame. That, are things that you have to decide on. My goal is simply to teach you how to trade with the specialist edge, the same edge that was taught to me over 4 decades ago and what I believe has sustained me, and hopefully we'll be able to do the same for you. Okay, with that said, since this is an educational class today, we have a good crowd, but I don't want to stop at every slide to answer a question. So if something doesn't make sense or if you don't fully understand what I'm trying to teach you today, don't worry. Ask me a question, but please wait till the end of class to ask questions, okay? I promise I'll get to each and every one of them. And I'll only answer one question right now. That's the most common, and that is this being recorded? Yes, it is. I believe a few Saturdays ago we had some major technical issues with my microphone, and I gave the entire webinar, or just about most of it, without any sound. Little did I know, I didn't know that till towards the end of the presentation. So don't worry if you're having technical issues. Sometimes it's my fault with my computer. Other times it may be your internet connection, but we will send each and every one of you a link to this recording, okay? All right, so questions at the very end. With that stated, let's begin today's class. All right, so let's get some insights into position sizing, because most people, it's been my experience that most people do it wrong, myself included when I first started trading. Too many traders, firstly, are undercapitalized. So, in other words, if you want to trade stocks, if you want to hold on to stocks, you really can't start. I can't tell you how many emails I get with students saying, well, Steve, I'd love to become a student of yours. I have about $1,500 and I want to trade stocks. That's really not enough. Okay, you're going to need anywhere from $5,000 to closer to $25,000 to actually trade stocks if you want to hold them overnight, and especially many times with margin requirements, you may want to have that, at least that amount. Now, it's wrong to use discretion when deciding on your position size. So many students of mine, I'll ask them, I'll say, well, how did you come to that decision about you were going to buy 500 shares? And they said, well, Steve, I've had a series of winners, and I just feel lucky, and so I usually trade only 100, but I feel, why not? I'll increase it to 500 because I'm really doing well. Or the opposite side of the coin, they'll say, well, Steve, I've had 2 or 3 winners in a row, but I get more and more fearful every time I get a winner because I know it's got to end pretty soon. So I'm decreasing my size just in case it does end. So instead of trading with a couple of 100 shares, I only trade maybe with 50 shares. All right, this is all discretionary. It's not based on anything other than your emotion. Now we bring you to the RPS method. This is a simple mathematical formula that must be used prior to every trade, okay? And why do we have to use it? Because it automatically decides how many stock shares you should be trading. I mean, think of it. It takes the guesswork out, and by adding structure to your trading, you're taking the guesswork out of your position sizing. You see, our philosophy is you should never have any guesswork in your trading, whether it's deciding the position size, whether it's deciding where to place your stop, where to exit. You should know prior to the trade even taking place where all these things are going to be. And then you can decide for yourself, well, it doesn't seem that that's that profitable, or it doesn't seem that they would work out that well. This is the exit, this is my entry, this is where how many shares I have. So you can decide whether or not you want to take the trade. I know this seems like a lot of work, and you say, well, Steve, in the heat of the moment, I can't come up with all these answers. Well, after a little practice, it's really very simple, okay? So I want to explain to you what the RPS method is. I'm going to teach you exactly how to calculate it so you can start using it as early as Monday if you like. Okay, so here's calculating risk with percent of capital first. So the first rule is you must start with an adequate amount of capital. Remember, we said, and we're not a broker, and we're not going to tell you how much capital you should have. But if we're just going to suggest it, we're going to suggest anywhere from 5 to 25,000. Okay, so if you have less than 5,000, I don't, in my opinion, which is just a suggestion, feel that's enough to really start seeing any results with. Now, we want to calculate percentage of risk per trade. This is our 2% rule. I'm sure you've heard this before with other webinars or other educators or blogs on the internet. But usually you want to only risk 2% of your capital per trade. Okay, so if you have $10,000, say that's all you have to trade with, $10,000. Well, you only want to, per trade, risk $200 of that per trade. Okay? This is not going to guarantee, but it's going to give you a good amount of confidence that even if you have a series of losers, you'll be able to come back and trade another day because each loss was only 2% or $200 per your amount, as opposed to some traders who will risk 25% of their capital. If you have a $10,000 account, and you'll say, well, I'm going to risk $2,500 on this trade. Okay, what if you lose? Well, you've just wiped out a quarter of your capital. Now you've only got 3/4. If you do that again, you may be down to only a half or a quarter of what you originally started with. So 2% is a good benchmark. You can do 1%, 1.5%, or even a half of 1% if you want, but 2% should be the benchmark that you're risking per trade. And conservative traders may want to include slippage, because a lot of times you may have slippage on the trade. You may want to include your commission costs. So it all depends what type of a trader you are. If you just want to use a standard benchmark, use 2% of your capital, the amount you have to trade with. If you're more conservative, you also want to include in that 2% any amount of slippage you may have and your commission costs. Okay, so here is the RPS stock position sizing formula. One thing I have to mention, I know a lot of you may be saying, because last time I did this webinar a couple of months ago, I had a lot of emails or questions during the class saying, well, Steve, so I can use this for futures, right? I can use this for currency pairs, or I can use this for other markets. Well, this is just a stock position sizing formula for stock position sizing, all right? A lot of you would say, well, how do I determine this with options? This formula cannot be applied with options because there are different factors that go into the option trading, okay? So this is only if you're actually buying and selling stocks. All right, so the first thing we want to do, rule number 1, is determine the 2% risk amount of your capital. Remember, let's say you had $10,000, that would be $200. Rule number 2, in my opinion, is probably the most important. You must decide your stop placement. Now, this can be off of a most recent high or a most recent low, depending if you're going long or short. But this is extremely important. You have to have a stop placement in mind prior to even executing the trade. This is so important. So many students of mine will say, well, Steve, I kind of determine where my stop and where my risk is as I go along, the way here. You can't trade like that. You can't, it's kind of like rowing, down a river and, someone says, well, there's going to be some major rapids down the way. Do you know how to row in this rowboat with rapids? And you say to yourself, well, no, but I'll kind of figure it out along the way. You can't do that because you're most likely going to capsize and fall off the boat, and you're going to be swimming through the rapids, and it's going to be dangerous. It's no different with trading. You have to know a stop placement prior to even entering into the trade. So which brings us to rule number 3. Let's say you're stopped out. What would be the total amount of points lost? Not the dollar amount. We're not concerned with how much money you lost, but how many points would you lose? Okay? All right, so now you know rule number 1 is you're determining your 2% risk, the 2% of your capital. You want to divide your 2% dollar risk amount by your total stopped out point amount. All right, so that 2%, let's say it's $200, you want to divide that by your total stopped out point amount. Let's say it's 2 points, 3 points, 4 points. And then you simply, after you calculate that, round it off to the nearest number for the proper position size. It's that simple. Let's look at that in the formula now. All right, R equals the 2% risk amount of capital. P equals the point loss if stopped out. And S equals the size or number of shares to trade. So R divided by P equals S. Let's use a hypothetical account. Let's say you're trading, you're lucky enough to have a $100,000 account. And this is position sizing example number 1 for stocks. Let's say you have a $100,000 account. Okay, R equals 2% of that. So that's the dollar amount you're going to be risking. So 2% of 100,000 is what? It's $2,000. So as you can see, R equals $2,000. Okay. Now P equals the point loss we're going to sustain if we are stopped out. So let's say our point loss is 3.25 points. That's where our stop is. All right, so that equals P. So P goes down here. You're going to divide R, $2,000, by P, 3.25. That will equal S, the size or number of shares to trade, which comes out to 615. That's the formula, the RPS formula. You see how simple that is? R divided by P equals S. Now let's look at another hypothetical example before we see some actual charts. Let's say we have a more close to home, a $25,000 account, okay? So what is 2% of $25,000? Well, R equals 2% risk dollar amount, which is $500. That's 2% of $25,000. So that's the amount we're only going to risk, the dollar amount. But what is the point amount? Well, the point loss, if we're stopped out, is 5 points on this particular example. All right, so we have R, which equals $500. That's 2% of our account. And here is P. That is the points we're going to lose if we're wrong. So 500 divided by 5 equals S, or the size or number of shares to trade equals 100 shares. So now we know that we can trade 100 shares of that particular stock. Now I know this seems a lot of, bit of calculation for people who aren't familiar with this. They'll say, well, Steve, sometimes I decide on the spur of the moment. This is a little bit too difficult. Don't worry. Over time, this practice, it's very simple. R divided by P equals S, and it'll take you less than 10 seconds to calculate. Later on in today's presentation, I'll show you an even quicker way to calculate it. It's automatically done for you on our platform. All right, so let's look at some chart examples. And these are older chart examples just so that you can understand the process. Then I'm going to be sharing with you some actual real-world examples, things that happened on real time in our platform. And I'll show you how simple it is to actually apply the RPS method on our platform. And remember, if you have any questions, I see some people are already asking questions. If you have any questions, please wait till the end of the presentation and we'll get to them then. This won't be very long. This will be a short educational class today because I just want to share with you the RPS method. Okay, let's look at this hypothetical $50,000 account, and let's say we want to trade Yelp, all right? Now remember, it makes no difference what strategy or what method you're trading. This is not a presentation today where I'm teaching you one of my methods or one of my techniques. You can trade any strategy, any system, any technique that you want to and apply the RPS method, all right? So let's say your particular method is based off of a pattern, okay? So you're looking at Yelp and you say, you know what, this is a buy to me here. In fact, I want to be buying this stock. So the first thing you do is calculate R, which is 2% of your account. So 2% of 50,000 equals 1,000. All right, so that's R. Remember, we're only going to risk 2% per trade. Now, remember, you can also risk 1%. You can risk a half of 1%. You can risk 1 3/4%. It's up to you, but 2% is the benchmark. All right, so now we have to figure out what P is. If we're going to be entering here, where do we want to place our stop? Well, our stop would be, let's say, right here on the low. Okay, so how many points is that? It comes out to 1.10 points. All right, so that's P. P equals 1.10. All right, so we have R and we have P. So we want to divide R by P, and that will give us S, or 909 shares. You can round it off to 910 shares, or just make it 900 shares. It's up to you, but that's how much you could buy with a $50,000 account, and that's a nice trade, okay? And you're keeping, and you see how if you continue to have some nice trades, as your account grows, well, your 2% risk will grow as well, and you'll be able to trade more and more. Why? Because your account is growing. Now, as your account is decreasing, if you have a series of losses, well, then that 2% will become smaller. And so you won't be risking as much, and you'll still be risking 2% of your capital, but you won't be using as many shares because you'll have the ebb and flow. As your account size is changing, you will be changing and altering with it. Let's look at another hypothetical account here and win. Now let's have a smaller account, a $25,000 account. Now, someone looking at this would say, well, Steve, wow, this stock is going down. Should I buy this? But let's say your system, your technique, is looking for a buy setup right here, all right? All right, so you want to only risk 2% of a $25,000 account. What's 2% of $25,000? Well, 2% equals $500. Excuse me. So that's, if you lost money, that would be the major amount of money you would lose per trade, $500, okay? That's, once again, not guaranteed, but we want to give you confidence so that you have a series of losses. You'll be able to maybe sustain 10 of these, and you'll still only lose $5,000, okay? And you still have plenty of money left in your account to trade. You'd still have $20,000, as opposed to some people who bet the farm per each trade. All right, so we're only risking 2%, which comes out to $500. All right, now we want to look and see the inner workings of the trade. Let's say you'll buy if you trade above this bar, because at this bar you feel you're too oversold, it's too low, all right? So let's say you get long here. Well, what if you're wrong? What if it goes up and then continues to go down? Well, you want to get stopped out right here. All right, so you're entering here. If you're wrong, this is where you're stopped out. Now, how many points is that? That comes out to 1.85 points. All right, so that's P. P equals 1.85. So the formula is you divide your 2% risk dollar amount, 500, by 1.85. So your size equals 270 shares. So you could purchase 270 shares to buy win right here. Okay, now here's the problem. If you purchase 270 shares at 101.5, which is most likely where you'd buy it, how much does that come out to? How much would that take for your account? $27,405, okay? $27,405. And how big is your account size? You only have $25,000. So this is a problem you have with the RPS method because it doesn't know many times what the price is of the stock that you're purposely purchasing or selling short. It only knows the method. But you have to calculate, you have to see that if you purchase 270 shares at 101.5, which would be your entry point, that would cost you $27,000 and almost more, almost $28,000. And you only have $25,000. And with brokerage accounts, they would say, you can't purchase this. And you would say to yourself, I don't understand that. I use the RPS method. So when your purchase exceeds the amount you have in your account, there is a way to get back on track. So here's the important rule. When it costs more to purchase your amount of shares that were calculated for you than you have, if your total dollar investment exceeds your capital amount, all you have to do is simply reduce your risk percentage. All right, so what does that mean? All right, so remember we are risking 2%. R equals 2%. Well, all you have to do is simply change that. So let's say we want to go down from 2 down to 1%, okay? So let's go to 1%. So we're only going to be risking 1% now of $25,000, and that equals 250. We're still using the same P, which is 1.85 points, but now the calculation is different. We're dividing 250 by 185, and instead of 270 shares, that now gives us 135 shares. Now, if we purchased 135 shares at 101.5, that would cost us close to $14,000. And do we have that amount of money? Sure we do. We have 25,000. So we could purchase, 101 shares, or let's just say 100 shares. Now someone could say, well, Steve, I'm only using 13,000, so why don't I buy 150? Why don't I buy 200 or, so. Remember, we want to add structure. We want to take guesswork or discretion out of this. Sure, you still have a good $12,000 left or, $11,000, but stick to the plan. If you go down to 1% or even 1.5%, stick to what the RPS method is generating for you. 100 shares is still plenty because if you had purchased 100 shares here, you had a very nice trade, okay? And that would add to your account size, and if you continue to do well, you would increase it, and ultimately you'd be able to now risk 2%. Okay, do you see how this works? Do you see how we're really adding structure? We're taking guesswork out, and this simple method is really deciding for you how many shares you should be buying and selling on a trade-by-trade basis. Now, as I said earlier, you can calculate this on your own, and I did this for years, but here's what we did with our platform. Pro Trader Strategies and I developed this platform to make your trading simple. And one of the ways in which we did this is by having our RPS calculator automatically programmed on the platform so that all you had to do was plot the, input the parameters, and in a matter of seconds, it tells you exactly how many shares you should be buying or selling. So what I want to do now is log on to the platform and show you how simple it is, and show you a couple examples, and just share with you how our platform makes trading simple and how this is included in our platform, okay? So let's look at some platform examples right now. And before we do, remember, we're showing you these performance results strictly for educational purposes only. We can in no way guarantee that any of the results I'm about to share with you in the future will be repeated. All right, so let's toggle on over. This is our platform. As you can see, the PTS Primo Charting Platform. And we're looking at MPC. Now this is going back to the middle of September, and one of our strategies, strategy number 4, generated a buy signal. All right, now sure, we had a really good trade here. All right, if you were one of the students of our strategy number 4 class, you had a really nice buy setup here in MPC. But remember, today we're not talking so much about strategies, we are talking about how to properly calculate our position size. So let's say we wanted to buy on the close, all right? So let's get our data box here, our panel, and we closed roughly at 53.41. Let's say we bought it at 53.5, all right? And we want to place our stop somewhere down here, let's say at 50, all right? So we bought at 53.5 and our stop is at 50. All right, so how do we do this? Let's say we have a $25,000 account. Right here in our upper icon portion of our platform, we have the RPS calculator. You simply click that on, and let's move this to show us some more room here. And let's say we have $25,000, okay? So it automatically is programmed to risk 2%. Now you can change this if you wanted to do 1%, you could do 1.5%, you could even do 0.5%. But let's just go back to the benchmark, which is 2%. Now we stated our entry price is 53.5, and our stop would be 50. That's it. We hit calculate, and there you have how many shares. Total shares you can buy is 142. You might want to round that off to 145 or even 150 or 140. The first thing I want you to look at is your total investment, just to see that you're in place here. Your total investment would roughly be $7,600. Do you have $7,600? Well, let's go back to your total account amount. Yes, you do. You have $25,000. So you can purchase 140, 150 shares. Now, here's all the information. On this amount, you're only risking $500, which happens to be 2%. Your point risk was 3.5, and there is your total shares you can buy. And we always say round it off to the nearest amount, 145, 150, or 140. It's entirely up to you. All right, let's say that you had a $5,000 account and you wanted to still do the same parameters. You would click calculate. You're risking 2%. Entry price 53.5, stop 50. Just hit calculate. This is a long trade. And now you can only purchase 28 or 30 shares. You still have enough money. You're only risking $1,500 and you have $5,000 to work with, so that's fine. But please remember, this is, I'd say, as a suggestion, the minimum you should have if you're trading, because you can only trade with roughly 30 shares, which is an odd lot, okay? You're not going to really progress that much unless you get some really, really big winners. But that's okay. I mean, you can still do it. It's a great way to learn. It's a great way to start. But over time, your account won't really accumulate that much unless you use some really, really proper money management. But as we said, stick to the 2% benchmark. Now, let's say you had, let's say you wanted to risk only 1%, okay? All right, if you went down to 1%, use the same parameters, you calculate, and you're only spending $764.65, and you can only buy 14 or 15 shares, all right? But you're only risking $50. That's the major amount. So you can still do these things. Remember, this is not including commission or slippage. A lot of other traders like to include that. It's up to them, but we don't know what commission costs are. A lot of firms are now not even charging commission, but you still have slippage, so you never know unless you place a limit order. So it's up to you. We just want to calculate the amount of shares. Now this would have been, let's go back and say we had a $25,000 account and we risked the benchmark 2. And so we purchased 140, let's say 150 shares, okay? Now one of the other things that we have on our platform with our particular strategies are our predefined exits. All you have to do is click on and hit range extension. And you can see this is where you should have been exiting the trade. Now, if you bought at 53.5, okay, and you sold roughly at, let's say 61.5, okay, so you've got a good 8-point profit times 150. So that's a nice between $1,000 and $1,200 you could have made there in just a week or so. So this is, just to show you how well our strategies work in terms of consistency, but mainly we're just trying to show you what you have on the platform. See how we make these things simple. These are all different exit levels. Exit level number 1 for traders who want to get in and out quickly, exit level number 2, and exit level number 3. These are all predefined. All right, let's look at another example here. This just happened very recently. Let's look at Apple. Okay. And this is Friday's action, and if we see right here, we had a really nice upward day. It wouldn't have been wouldn't have been great to get long Apple the day before. Well, if you look at our strategy 9, which trades off pullbacks, guess what? Gave a buy signal the day before. This is the beauty of our different methods, okay? So let's use the RPS method on this particular signal you would have had, okay? Let's give ourselves a little bit more room here. Okay, strategy number 9. So as we see here, let's say we bought on the close, all right? Because strategy number 9 is a pullback, meaning you'd like to buy at lower prices. So let's say on the close, 5 minutes before the close, you saw that it was generated in a strategy number 9 signal, your favorite strategy. So it closed roughly at 220. Let's say we bought it at 221, okay, with a little slippage there. We purchased at 221, and the low is about 215. Let's say we placed our stop at 215, okay? All right, so if we had our RPS calculator, which we have right here, let's say we had a bigger account because we're trading a $200 stock. So we have $50,000, okay? We're only going to risk 2%. We wanted to purchase it at 221, and our stop is at 215. So we're risking 6 points, all right? It's a long trade, but had we done this, we could have purchased 166, maybe 170 shares, all right? But how much would this have cost? It would have cost us about $37,000. It would have cost us. But remember, a lot of students get confused. They say, so Steve, I'm risking $37,000. I thought you said you're not supposed to risk more than 2%. No, because of the amount of shares and where you would get stopped out. If you got stopped out, you're only risking $1,000. That's the amount of capital risk, and 1,000 is 2%. So you would still have $49,000 left. You see, students get confused. They say, well, I'm spending $36,000, so that means I have that much to lose. Sure, if Apple went to 0, but you're not going to wait for Apple to get to 0 before you say, well, I guess I lost on this one. You're going to get out much quicker with a 6-point risk amount. Okay, that comes out to $1,000. So if you lost on this trade, you would have still had $49,000, enough left to trade another day for another time and to still be in the game. All right, so let's say we wanted to only risk 1%. All right, so we go down to 1%. All right, we still have the same parameters. We calculate, and now we can only roughly buy about 85 shares. Now we're only spending $19,000. We still have that much, but we're only risking 500. So if we lost on this trade, well, guess what? We still have 49,500 in our account. So this is where you come into play. Remember, as your educators, as your mentors, we're not telling you what to do. We're simply providing you with this education. Ultimately, you've got to experiment with it and decide for yourself, well, where do I feel comfortable? Do I feel comfortable with 1%? Do I feel comfortable with 0.5%? How about 2%? The standard benchmark should be 2%, though. You never really want to go above there because it's kind of a slippery slope. If you, say, have a successful trade risking 3%, well, you say, well, maybe I'll risk 4% the next one or 5%. I can trade better. And then ultimately you have a big loss, and then you give back everything you gain. So try and stick with the parameters of 2%, okay? Lastly, let's say we have some different parameters. We have a $15,000 account. We want to risk 2. We're entering at 221, but we want to place our stop way down at 200. So we're going to risk 21 points, okay? Now, that doesn't mean we're still going to lose 21 points of value in terms of what our capital is. We're only going to risk 2%. But let's see how the parameters change here. Well, we calculate, and we're still only risking $1,000. But this time we can only buy 4,750 shares, okay? And we're only using 10,000 of our capital. So we still have 40,000 to trade other signals with, okay? But we can only trade with 47 or 50 shares. Let's go back to the parameters again. Let's say we risk 2%. We're entering at 221, and our risk is at 215. Okay, so we calculate. We can purchase 165 shares, let's say, okay, 165. Now we entered, remember we entered at 221. All right, once again, using this trade was only 1 day, but you just double click, hit range extension, and if you wanted to, you could have exited yesterday at 226. Let's say you made 5 3/4 points, 5.75, and you had 165 shares. With my trusty calculator, that's $950 in 1 day, all right? Not a bad little, I think that would have purchased, I don't know, Pro Trader Strategies handles all of our discounts and pricing, but I think that would have paid for the course right there in that one trade. I'm not guaranteeing you that every Strategy 9 trade works out that way, but they all have a high level of consistency, and many times students have referred back to us that they've made back the cost of our particular course in 1 or 2 trades. and this was a perfect example, using our RPS method with the correct position sizing, and then using our predetermined exit levels that we explain in our courses as well. Okay, so let's go back to the presentation. We share with you exactly what the formula is. We also talked about how to do it automatically on our platform. So let's recap. Remember, what is the RPS method? It's a simple mathematical formula that automatically decides how many shares to trade. And remember, when we say shares, shares pertain to stocks. There are no such things as shares in currencies or shares in futures. All right, we're talking about stock trading only. Now, an extremely important rule, I have to say this over and over again because this is where students usually have difficulty with. If your total investment exceeds your capital amount, in other words, the amount of dollars you have to work with, all you have to do is simply reduce the risk percentage, all right? In other words, if you're risking 2%, go down to 1.5% or go down to 1%. So many students, when they first saw this, they say, well, gosh, it says I can buy Apple here, but it's going to cost me $50,000 and I only have $25,000. So I guess I have to nix that trade. No, you don't. You don't have to nix it. You don't have to negate it. You can simply reduce your risk percentage. For example, one last time, if you have $25,000, okay, your risk is 2%. Let's say your entry price is 52.70. Your stop price is 51.85. You calculate and look at your total investment. You can buy 588 shares, maybe round it off to 590 or 600, and it's going to cost you roughly around $31,000. But how much money do you have? You have $25,000. So this is where students would say, well, this doesn't work. It's improperly calculating stuff for me. I can't trade this. Well, yeah, it just means that the formula doesn't know the prices of your stocks coming into it. You have to input that in. So all you have to do is simply go down on your risk capital amount. If your total investment exceeds your capital amount, then decrease this down to 1%. And now, with the same parameters, buying and stop placement, all you have to do is calculate, and it will give you, the proper investment, which is 15.5. And you can buy now 294 or 300 shares. So you can still be in the trade, but now your risk parameters are less. That's all. As we recap, remember, never use discretion. Too many students say, well, gosh, I feel lucky today. God, I just know my stock is going to go up. I'm going to buy 1,000 shares. Based on what? Well, just based on because I feel lucky. Or a lot of students are basing them off of fear. They say, Steve, I've had 5 winners in a row. I know my luck's going to run out, so I'm going to, bet the bare minimum today, maybe an odd lot. That's silly. For all you know, you could have 50 winners in a row. Make sure your trading is adequately capitalized. You know how much is enough and how much is not enough. It's entirely up to you. We can give you suggestions, but we're not a brokerage firm. If you want more calculated suggestions, contact your broker to see how much you really need to trade stocks with. Now, the basic format on risk is to only average 2% per trade, all right? The RPS method is a simple mathematical formula that must be used prior to every trade. Now, I know it seems difficult right now. You may say to yourself, well, Steve, my strategy is like on the spur of the moment, and I don't have enough time to do this. Well, this is where the platform really comes in handy. It can really automatically do this for you without a lot of thinking. It'll take you less than 10 seconds, most likely. Why do you want to use the RPS method? Because it automatically decides how many shares to trade. And by adding structure, you take the guesswork out of position sizing. You should never have any guesswork in your trading. Remember, think of an airline pilot. Think of a brain surgeon. Should they have guesswork in the way they are using their skills? Should an airline pilot say, well, let me guess here how I should land this? Or the brain surgeon say, well, let me guess here on how I should operate? No, they should know exactly what to do if a different situation arises. They should never be guessing. And it's no different from trading. You should take the guesswork out and have a clear-cut plan. And once you have that plan in place, you can decide for yourself whether you want to take the trade or not. All right, we have a great discount and an offer for all the attendees today. We're going to offer you a 30-day trial for only $7 to our platform, the PTS Primo Charting Platform, which includes the RPS method. You not only get the RPS method, but enhanced buy-sell line feature. This is a tool that I designed with Pro Trader Strategies to automatically tell you the overall trend, whether you should be buying or selling. Also, our strength of trend tool we designed that really does a great job of telling you when the trend is running out of gas or it still has a lot more momentum left in it. You have a signal scanner, Bloomberg TV, over 90 of the most prominent indicators, and great personalized tech support. This all comes included in our $7 offer. This is the educational platform that automatically generates your position sizing for you. So here's how to take advantage of this. Contact Pro Trader Strategies. I designed the platform with them. They are in charge of all of our discounts and all of our pricing. If you have any more questions concerning the platform or tech support, they are the ones to contact. Or if you have interest in purchasing a strategy, they would be the ones to contact at trading at Pro Trader Strategies. Or you can call them directly at area code 310-598-6677. Now that link you see at the very bottom will take you to the $7 sign-up page for this great offer. Or if you want to, you can go to the chat box on the far right of the Go to Webinar column, and you'll see that there is a live link that's been posted, and you can simply click that on, and it will take you to the sign-up page. Now we are at the end of the presentation. I promised I would take all your questions now, so if you have any, please feel free to ask any questions, okay? All right, as I open up the question and answer box, we see, will this work for futures? Hi, Christopher. Well, as I stated earlier, and the title of this presentation is how to properly calculate your stock position sizing. But there is a way to do it for futures. So what I would suggest, but we don't have that calculation automatically on the platform. This is something you will have to do by hand. I would say if you Google any of our presentations, our webinars, because we're all over the internet and on YouTube, we have a lot of presentations. There are some presentations that have been recorded like this where I do show you how to do it with futures and currency pairs, okay? But we don't have that on the platform. That's why we only stick with this particular presentation right now with our platform, because we want to offer you something where it's automatically provided for you. So we don't have the automatically futures set up on our platform. So this is something that you'd have to search for on YouTube, okay? Let's see, Steve says, he says, can I trade with a less than $3,000 account? Sure, you can. But remember, once again, you're getting really in the smaller parameters of this. And once again, this is something you should ask your brokerage firm, all right, if that's enough, or exactly how you want to trade. Remember, we're not a brokerage firm. We're not affiliated with any. We're simply an educational firm. So we're trying to educate you, but you must be adequately, capitalized. So contact your broker for those questions. Jay's asking, what about options? One thing I can tell you, this does not work with options. And the reason is because there are too many parameters involved with options. You see, you can have a stock that, basically stays still. It's in the same position. Maybe it has, one tick range for a week, but the option price will diminish. Maybe it goes down $1, maybe $5 because there's no movement. Because of that, because of there being different parameters, that is where this will not work with options, because it's changing and it's too dynamic. All right. And so even though it may come up with a calculation here, it doesn't necessarily mean that that calculation will hold a week down the road. So no, I'm sorry to say this does not work with options, okay? I think there are some other ways to do it, more with Black and Scholes type of things and stuff. Remember, I'm not an option trader. I stopped trading options about 40 years ago, so I wouldn't be the one to ask. But unfortunately, the RPS method really works best with stocks. There is a way to do it with futures and currency pairs, but I would look on YouTube for some of my old presentations where I talked about that, okay? These are good questions. But I can definitely tell you this calculation does not work with options, okay? Okay, good questions. Any more? Remember, someone's saying, is this $7 offer good forever? No, it's only good for 30 days. So because we want you become acquainted with all the education, all the different features. I mean, there are literally, dozens of features on our platform. And this is just one of them. But we want you to become acquainted with the basic one. So this is a great way to do it. And we don't want to charge you an arm and a leg the way some others do. Like they say, well, for only $100, $150, you can get a great, a monthly view of our platform. We feel that's asking you too much. So we're only charging $7 for 30 days. You get free use of all these things offered. And then after 30 days, you can decide for yourself whether you want to continue or not. Someone's asking what's the price after that. I believe it's only $97, which is still extremely inexpensive. I've traded platforms that are anywhere from $300 to $500 per month, and they don't come with half of the information that we provide for you. Remember, our platform has all of the things that I've accumulated in my 43 plus years of trading. So these are the things that I use on a daily basis that help me, and hopefully they'll be able to help you. Okay, well, if there are no further questions, I want to say thank you so much for attending. I hope you saw the attention to detail that we really try to show you in our presentations, where we really want to teach you something. Even if you decide not to take this offer, at least you have something to go away with that you can hopefully use in your own trading, that can enhance your trading and make you a more consistent trader. So you see our attention to detail, you see our sincerity. So come on board for $7. Take advantage of this great offer. I'd love to have you as a student of mine at the PTS platform and using our RPS method, okay? As we conclude here, we take one last look at our disclaimer. I just want to say thanks for taking time out of your Saturday, and I look forward to all of you becoming students of mine and members of the platform. Thank you so much. Have a great weekend, and I'll see you next time. Bye-bye.